Hello and welcome to another TomTrades, a long overdue TomTrades, might I add. So this is a chart of AMC from last December. This is a short setup. I'm sure a lot of you have already noticed the nice bear flag here that's formed. This red line is kind of the support for the bear flag and what I used as a trigger for the short entry. So the short entry occurred here on the 10th of December. You can see the wick dipped right below what I thought was support, and if you can imagine on this day what that candle would have looked like when it was near the lows. You have a nice red full candle that's starting to break down from the bear flag. So I think that probably was a decent place to get short, just below 14, around like 1385 I think it was. But the day didn't really end up the way you'd hope. You have this wick, wasn't looking the best, but no reason to get out yet. You can see the green line right over here is the stop loss. So let's fast forward one day, and we're out. That's a full loss in one day. Clearly didn't break down, so you just gotta respect your risk and get out. Not much more to it. If you fast forward a few days, what made this a little bit frustrating is all of that. So you can see it would have worked out, but you have to respect your initial trade plan and just get out of the trade when it's not working for you. I mean, you know, when you go from looking like you're almost going to break down to, you know, total failure of the pattern within a day, you just have to take a step back. Would there have been a second entry in here somewhere? Maybe. I mean, maybe you could have, maybe there, or even on that day, you could have said, okay, this is you know, you had the one fake out, another fake out, and now it's going to break down, but I just walked away from the setup. This is Nike starting in late January. This is a long setup, bull flag forming here on the chart. Right now, based on this, we're just watching it. We're going forward a few days. I'm not long yet, so this green line will come into play. This is sort of the top of the range, and the red is the bottom. And they will eventually become, you know, entry and stop levels. But let's see how this plays out. Here's the breakout. I'm still not long. I missed this. The following day, we had this dip here, and I used that as an opportunity to kind of get, the market gave me a second chance basically to get long, and I took it. So is that as good as being long on the first move? Probably not, but I got a good entry price, and you can see it worked in my favor by the end of the day. So, phew. Next day, not much. So we're just trading in this tighter, we're getting a tighter and tighter range, which is actually something that bodes pretty well. You have this nice little volatility compression that hopefully resolves in your favor. There we go. Very nice. And there's your target.
And there was much rejoicing.
Easy long trade. I got lucky with getting an opportunity to get in on the day following the breakout on a little pullback that by the end of the day had closed back at the highs. Just like in the last trade I showed you, sometimes, you know, the market takes, sometimes the market gives. But what's important is to manage your risk and your stops and all of that. Let's see what happens if we go forward a few days. Yeah, so there might even be another good long setup here. Another maybe, I don't know, maybe right here. You could have looked at this as a secondary entry on another bull flag. Yeah, pretty standard breakout trade. You're long, you have your stop, your first target. And hopefully you get there in a few days without having to sit through much of a pullback. So this one worked out pretty well. All right. Thanks for watching, and hopefully I'll be back sooner with some more trades.